we last met in March in Toronto at the PDAC conference, and since then the silver price has risen quite considerably from about $23 to $31 as of today. In fact, I think you pointed this out on your Twitter, that silver has been the best performing asset year to date, excluding Bitcoin, potentially, in a group that includes, various government and corporate bonds, the NASDAQ, the S&P 500, gold. So naturally, I'm curious to hear about your thoughts about the reasons for this relative outperformance. And do you think it was, leadership from the gold price, strong industrial demand from the East, or the recognition that perhaps the exchanges are running out of silver? Which issue do you feel is to blame for the rise in the silver price recently?
I would say all of them to some degree. For sure, gold's been resilient. We know that gold's been, in fact, outstanding the last couple of years. There's been so much buying by central banks that there's been this sort of question about why gold stocks have not performed, but gold has. And I think that Adrian Day probably put it best, actually, was back at VRIC in January, from what I remember. And he was basically saying that, the gold is strong because of central bank buying, and central banks are not buying gold stocks. So it makes sense for gold to be there. And you didn't have market conviction on the equity side, and so the stocks were lagging. Ultimately, I think that has caught up in terms of the silver price, and so we've seen silver just absolutely zoom since end of February. It's been tremendously strong, as you said, somewhere around $22, $23, and we've touched 32, back to about 31 now. And silver's been the best performing major global financial asset, as you say, excluding perhaps Bitcoin and the odd one or two others that we may have missed, but that's really quite impressive for an asset like that. And you mentioned a couple of other reasons. One of them being how the future exchanges are being drained. We see the ETFs being drained. And then we see this fourth year forecast by the Silver Institute, where they're expecting a 215 million ounce deficit again for this year. So that's really a structural deficit. I'd like to kind of point out the silver market total supply between mining and recycling is 1 billion ounces a year. And so we're talking about a deficit that's over 20% of the entire supply, both mining and recycling combined. That's tremendous. And it's going to be the fourth year in a row of 100 plus million ounces. So 2021 was about, let's call it 1 million ounces. 2022 was crazy at 263 million ounce deficit. Last year was 184 or so million ounces, and the forecast for this year is 215 million ounces. Wow. The Silver Institute thought we were going to be somewhere around, I think it was 140 million ounce deficit. And I said, that's too low, and that we would be in the 180 to 190 million ounces. Well, we're right in between 184 million ounces. And I think they'll have underestimated this year's deficit as well. Time will tell.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, U.S. Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
There seems to be this narrative being peddled at the moment by some analysts, and perhaps they have some, credibility for it, that silver is losing its monetary component. And actually what we've been observing in the markets of the last few months even is that silver has been, in fact, following gold. And it's evidence of the fact that this monetary component is still existing. So I kind of want to talk to you about a few monetary events that are coming up, as you well know, with the that could affect silver. So do you expect silver will respond as positively as it did in the last 3 rate cutting cycles, where it averaged, I think, between 300 and 400%? I think you pointed that out.
If you look at the last 3 times that the Fed engaged in rate cutting cycles, silver did extremely well, and it followed gold. And I'm going to get back to a point that you mentioned earlier, but silver returned over 400% on average if you look at the last 3 rate cutting cycles. That is just fantastic, phenomenal. And I think that people need to prepare for that. And yes, it'll come with some volatility. But if silver can do that, they need to consider what silver stocks can do, because they're going to leverage that probably at least 2 to 1 and probably well beyond it. So the opportunity is going to present itself. It's coming. I think we need to gear up for it. People need to do some research and position themselves, and also understand themselves in terms of knowing themselves, in terms of their risk tolerance. But it's definitely something that they're going to want to take advantage of. In terms of what you said earlier about how it's some are saying that it's losing its monetary component. So I like what you pointed out, the fact that it having followed gold and really shot up in the first half of this year, to me suggests that it maintains that monetary aspect. I think it's not so much that it's losing it. I think it's that the industrial component of silver is growing versus, in other words, the monetary aspect is probably more or less staying what it has been for decades. I think it's the industrial component that's sort of creeping up on it and taking some of the overall share of the pie.
Yeah, proportionally bigger. Yeah.
Exactly. So if you look at the numbers, I think that industrially we're looking at probably around 60% now of silver going to industrial uses, and 40 to some kind of monetary demand. And I personally combine the buying of investment silver through bars and coins along with jewelry and silverware, and I consider those 3 to be overall loosely investment demand. So what I would say is, anyone who says, well, okay, so investment demand is now not as important, I would actually flip the table on that and say, if it has reduced its importance in the overall pie, or its share of the overall pie, when it does kick in, there's less silver available for investment demand, and therefore it could leverage up its effect. In other words, the less silver available, if people pile into buying silver for investment purposes and there's less available, they're going to have to bid it up.
Yeah. Absolutely.
So we could just really see it explode. And again, I just think that it has a place in everyone's portfolio. It's a question of proportion.